Hello everyone, and thank you for joining us at this Your Overseas Home webinar. My name is Christopher Nye, and I'll be hosting the session along with Trevor Charnley from Smart Currency Exchange. Now, today we are discussing the currency markets, do's and don'ts for paying for property overseas, and everything that you need to know about that payment process and the currency markets and so on. It's great to have you with us, you all with us today, whether you're with us live or catching up on demand. And we're delighted to help you realize your dream of buying a property overseas. Today's session is going to be 30 minutes, and there should be plenty of opportunity to put your questions to Trevor from Smart Currency Exchange. If you just wish to ask anything, just type your question into the questions tab on the right-hand side of your screen. And if you need a reminder of anything discussed today, or you want to share this with family and friends, a replay will be available on the Your Overseas Home website to watch at your leisure. Okay, now, so what we're going to do is Trevor's going to give us a presentation and talk about the basics of the currency exchange process, and then we'll have a Q&A afterwards. So if you could just introduce yourself, Trevor, and then and tell us what we need to know. Thank you.
Thanks, Chris. Good evening, everybody. So my name is Trevor Charnley. I'm Managing Director here at Smart Currency Exchange. We help tens of thousands of customers every year who are going through exactly the same journey as yourselves, going through this overseas buying journey or indeed selling journey. We help them understand what they need to do from a currency perspective. We'll explain the risks associated with transacting internationally and help them make informed decisions on what they're going to do with their currency. Make it really simple, really easy for you so that you don't have to spend your time, effort, energy worrying about transactions, and actually you can spend your time enjoying the fun part of buying that overseas property, going on your viewing trips, making those plans as to works or renovations or whatever else it may be that you're going to do with your overseas property. So we're going to talk about the currency markets and what you need to consider when making that overseas transfer. I'm just going to reference back to 2022 to start with. What an unusual year. I mean, currency markets were obviously incredibly volatile over the last few years. To be honest, coming into 2022, we thought perhaps we'd seen the end of major volatility on the back of COVID. But some other factors intervened in 2022 to make it perhaps one of the most volatile years on record. So the graph that you're seeing in front of you is sterling euro. So that's from the 1st of January 2022 to 31st of December. For many of you, if you're based in the UK or you're denominated in sterling and you're going to be buying in Europe, this is your key currency pair. This is what you're going to be interested in. If you're buying further afield, in US, perhaps Australia or wherever it may be. To be honest, if you watch some of the graphs, although there were some significant differences, sterling was the main driver of a lot of the currency volatility last year as a result of some of the political and economic turmoil, which I'll talk through in a second. But as you can see, last year, from the highest exchange rate of the year to the lowest exchange rate of the year, which was achieved in September after the tragic mini budget, there was a 14% difference between the top and the bottom. And just to put that into context, if you look at the average over the last 4 years, one would expect on sterling euro to see a variance of 10% between the top and the bottom. That's kind of the norm on an annual basis. But 14% last year is particularly volatile. I'll just talk you through some of the influences in 2022. Still huge hangover from COVID, obviously, particularly, I mean, actually, if you look at the UK, it seems to have recovered slightly better than certain pockets of the globe, but still business and the economy very much struggling from the recovery and the expense of the COVID-19 pandemic. Russia-Ukraine conflict not only clearly has it affected the UK as well as Europe, but the UK has been particularly over-indexed in terms of its implications. Obviously, if you look at the supply chain of our energy, particularly gas, we have been overly impacted in terms of cost of living. Subsequently, the cost of living crisis, not just based on energy, but everything else. There's been a particular lack of appetite in terms of sterling in certain facets. Queen Elizabeth II's passing had a huge impact as well. And then predominantly the political instability. If I just flick back and just highlight that September, end of September dip, that was all down to the political instability of that period. Boris Johnson's resignation, the September mini budget, which was so poorly received by the market, Truss's subsequent resignation, and then subsequently Sunak's new budget with revised measures. Although the markets right now, and we're talking here not just about currency markets, we're talking about markets in general in terms of investment, they do seem to be far more buoyant in terms of supporting Sunak's revised plan. There is still very much that hangover in terms of international investment in the UK on the basis of Truss and Kwarteng's mini budget at the end of September. So it is going to take us some time to see certainly confidence come back to the international market when it comes to looking at placing money into the UK, whether it be in terms of business, buying government bonds, or indeed in other investment areas. So how that then applies to yourself when you're looking at overseas property, to be honest, I mean, although economics clearly, for me is incredibly interesting and I love talking about it, it's really important to understand how that applies to you when considering your overseas property purchase. So it's really important that you understand how your budget works. So as we saw on that initial slide, currency rates move in significant ways. They move hundreds of times every second. Now, for you, when you're going through that property purchase or property sale journey, you have a period of time. So from that moment that you place an offer on a property, you are exposed to currency risk. Now, you may be exposed to risk over a 3-month period. Your property purchase may take 12 months. It completely depends on the state of that property. It depends on where you are in terms of your contacts, how long your solicitor, vendor is going to take, etc. But typically speaking, that overseas property journey is probably going to take you between 3 to 9 months from the point that you have your offer accepted. So as you've just seen on that first slide, a 14% movement over a year, if you were to scale that down to 6 months or 9 months, you can see that there's a lot of exposure there. When you've agreed a price, for example, on day one in euros, when you come to completion in 6 months' time, the currency rates may have moved significantly against you. And at which point it's really important that you engage with a currency expert early on so that, one, you can understand your budget. So say, for example, if you've got an amount of sterling that you'd like to spend on your overseas property, you want to understand what that can afford you in euros. You want to understand any volatility that may be coming your way so that you can perhaps incorporate some redundancy in there. Perhaps you don't want to max your budget because you don't want to be in a position when come completion day, you've suddenly got to find an extra 20, 30,000 pounds worth of euros because currency rates have moved. Important to engage with that currency expert early so that you can understand how to budget for those currency rates. Understanding currency risk. So just being through those movements, they're very, very unpredictable. And it's really important that the moment that you've got that initial offer accepted, you know exactly what you're going to do from a currency perspective. Are you going to let the currency rates just ride and see where it gets to when you come to completion date? Or are you going to consider perhaps some products and services which are going to allow you to remove any currency risk? Forward contract is a really, really interesting product. It's a product that thousands and thousands of customers utilize with us every single year. It allows customers like yourselves to remove currency risk. So what a lot of customers will do in a typical buying journey, they will place that offer, have that offer accepted, and as soon as they pay the deposit, they will secure their exchange rate on that day for delivery in the future. So for example, if I was in a position where I was expecting my property purchase to last 6 months, on day one, I place my offer, have my offer accepted, I send my deposit across to secure the property. At that point, I can agree my forward contract at today's exchange rate with my currency broker. And that way, wherever the exchange rate is in 6 months' time, I already know how much sterling I need to pay on completion day to complete on my property, irrespective of what happens in the market, irrespective of what political turmoil or economic turmoil is to come over the next 6 months. I'm safe, I'm secure, I know exactly what I'm going to need to pay on completion day. That's a really, really useful product, particularly when it comes to overseas property. Market orders, again, really interesting product, which many of our customers use. So a market order is a really simple tool. It's effectively an electronic trigger. So say, for example, if sterling euro today is at 113, say, for example, if you say, actually, I'd like to try and achieve 114 on my exchange rate, you can place an electronic trigger to buy euros at 114 when and if the market gets there. They operate 24 hours a day, 5 days a week, and many customers utilize them to try and achieve slightly better exchange rates than what are in there today. Some customers use them to try and be particularly ambitious, but of course, if the exchange rate doesn't get hit, then of course the market order doesn't trigger. So again, useful product to talk to with your currency expert. And a regular payment plan. We're obviously focused today predominantly on overseas property. However, once you've bought that overseas property, perhaps if you're emigrating, or indeed if you've got regular payments to make for perhaps community fees or insurance or gardeners or cleaners, etc., it's worth considering how you're going to fund that on a monthly basis. So regular payments are really, really easy to set up. They effectively allow you to automate the payment process. So say, for example, if you have a monthly community fee to pay as a result of your property, you can simply automate all that, set it up on day one, and then just let it run until such time that you may need to cancel it. Say if you sell the property in the future, it just means it's so much quicker and easier for you, and you don't run the risk of forgetting to pay some of those overseas invoices. We're just turning some of those rates into real life, into that property buying journey. So just applying some of the 2022 exchange rates that were applicable. So Jason and Kylie. So say Jason and Kylie decided to buy a small villa for 300,000 euros on the Costa Blanca. At this stage, cost of the property is £250,000. So this is based on the exchange rates that were available in 2022. So applying those to where we are in 2023. So at that stage, that €300,000 property would cost £250,000 in total. So they've found the property, they're going through the negotiation process. They find that property, they agree to pay their 10% deposit of €30,000, and the property comes off the market. And based on where currency rates moved between March and May last year, at the stage in May, then that property would cost an extra £5,000. So that property would be £255,000 effectively. Now, if you then fast forward, so come completion day, which is September 2023, they need to transfer the remaining €270,000 to complete the paperwork. At this stage, the total cost of the property will be £263,000. So you can see how through that 6-month buying journey that you may go through yourself, you can see that difference there between £250,000, which was the original price that they were budgeting, and the end price, which was £263,000. That's why it's so important to understand how currency rates move and how that could impact you and affect you. Really important to engage with that currency expert early, because you could find yourself in a position where suddenly on completion day, you're having to find an extra £13,000 to actually finish the completion of that property. So the question there is, of course, when the tools and services are available to you to remove any currency risk, why would you take that gamble? So key elements there: speak to an expert, make sure you engage with them nice and early, tell them exactly what you're thinking, tell them exactly what you're planning to do, and let them help you. People can spend hours and hours and hours researching, finding such poor information that's available out there on Google. Speak to an expert early, lay out your plans, lay out what you're looking to do, and allow them to run through the options. That will then allow you to make an educated decision, an informed decision on how you're going to treat the currency aspect of buying an overseas property. understanding your budget, absolutely critical on day one. Go and find that dream property, then go and secure your exchange rate. Once you've placed that offer, if you don't want to take any risk on the currency, get your exchange rate secured with a forward contract, and then go and enjoy your new home. So finally, just 60 seconds on Smart Currency Exchange. So we are the trusted voice for high value international payments. We do specialize in property transactions. We helped 10,000 people last year go through this exact same journey. We've exchanged £12 billion in currency. We're a big, reputable firm. Over the last 10 years or so, we've helped over 45,000 clients go through the property buying journey. Clearly, we execute lots of transactions on behalf of customers. As you can see, about 600,000 customer transactions. You get lots of customers that are sending regular repeat payments, etc. We're rated excellent on Trustpilot. It's one of the key things that we try to do. We seek customer feedback all the time, because clearly there's nothing more important than getting customer recommendations. So please do, if you'd like to talk to us, please do have a look on Trustpilot and understand some of our customer feedback and get some confidence that you're dealing with somebody that is well experienced and people that will help you. And we are a UK-based firm, head offices in London, and you will be dealing with UK-based individuals. We don't use overseas call centres. And finally, on to Q&A. So, Chris.
Okay. Thanks very much, Trevor. That was really, really useful. Now, we have had a few questions in. Our first one from Alex kind of gets to the nub of the question. Should I lock a rate in and wait for the summer? What was the ideal time from last year? So should he wait for the summer, or should he lock it in now? So basically, where exchange rate's going.
Yeah, so it's a really good question. And to be frank, Chris, I would love to tell you exactly where exchange rates are going, but to be frank, I probably wouldn't be on the phone to you here. I'd probably be on the beach somewhere in the Caribbean. It's really difficult to say. I mean, from our perspective, we are seeing some positivity coming out of the UK in terms of foreign investment, which typically does make sterling a bit more buoyant. It makes stocks and shares in the country a bit more buoyant. However, the best guidance I can give to anybody that's buying overseas property, don't worry too much about the currency exchange rates on the back end. I would worry about them on the front end when you're doing your budgeting. If you find your dream property that you want to go and purchase and you can afford it at the time based on the current exchange rate, my guidance would be get that locked in, get it secure. Don't worry too much about whether it's going to go up or down in the future. I would get it secure at that point, because the last thing you want to do is be in a position where come completion day, suddenly you've got to find an extra 10, 15, 20,000 pounds. Or for some people, it may mean the difference between being able to afford the property and not. So my recommendation would be, don't worry too much about whether it's going up or down. If you could afford it at that moment in time, get your forward contracts agreed, remove the risk, go and enjoy your property.
Yeah, in my experience, the exchange rate dipped just before my my summer holiday. So I know, we've had recent summers where it's been down at 108. Yeah, it's definitely better to know what you're going to get. Alex also asked about he's buying a property in Crete, and he needs to split his payment into 3. How would that work?
Yeah, really simple. So again, the same principles apply. So if I were to give the guidance on that, so once you've had your offer accepted, if it's split into 3, I suspect there'll be probably an initial deposit payment and then a couple of staged payments perhaps, and at which point I would recommend doing exactly the same thing. So on day 1, I would agree your exchange rate for each of the payments going forward. One with your immediate date, which will be your deposit, one with the date of when you're expecting your first stage payment to go through, and one with your final stage payment. So it can be broken into chunks, but we can agree all those payments up front. So that will be my guidance. If it wasn't something that he wanted to do in that way, if he actually did want to let the exchange rates ride, then equally same kind of thing, but you can just execute those transactions on the day. So simply a case of a couple of days before the stage payment 1 and stage payment 2 are due, it's a case of getting your exchange rate agreed with us. Send us the sterling, we'll send out the euros. But my guidance would be get all three agreed. Once you've got your offer accepted, get that currency risk removed.
Sure. Okay. Well, the last thing you want to do is get 66% of the way through the purchase and then find the rates moved against you.
Yeah.
Okay. I've got a question from Kerry. What fees are involved with? Well, she said what fees are involved with a forward contract, such as commission. But I guess it's the same with a spot contract too.
Yeah, absolutely. So the exchange rate that you agree with us is the exchange rate that you get. So how we make our money is in our exchange rates. So we, as a company that buys billions of pounds worth of currency every year, we buy at a rate in which banks are trading, and we then apply a margin which we deliver to our customers. So that's how we make our money. So when we're offering an exchange rate to a customer, that is exactly what you get. We don't charge you, an hourly rate or any fees on top. What we give to you at that point is what you get on a forward contract. Because we're securing an exchange rate for you up front, we will ask you for a deposit on day one, but that is towards the value of the contract. So it's not a fee. It's just a deposit to secure it.
Okay. Now we've had another question also, on a similar kind of theme. But if we lock in, say, 200,000, and the sale falls through, family trauma, whatever, what happens to the money and indeed the contract?
Yeah, so it's a good question again. So once you agree that contract, that is an agreed contract. So that is required to be completed. However, being a firm that obviously deals with a lot of property transactions, these things do happen. Sometimes property purchase and sales do fall through. So what we will typically, most customers won't necessarily be therefore not going to find another property if something falls through. So what we'll typically allow customers to do is to extend that contract. So say, for example, if I've had an offer accepted, 6 months down the road, for whatever reason, it falls through, I'm then going to go back on the hunt, go and find a new property. I find one and I'm going through that process again. Then we will work with the customer to extend that contract forward, if that makes sense, so that they can then transfer it onto the new property. It's not linked to the property necessarily, but we will always work with customers because sometimes life does happen. So we'll typically work with the customer to allow them to extend it.
Okay. Now David has noticed that we tend to talk about the rate going down, but what happens if the rate goes up? And so we've locked in a rate, but the exchange rate has actually improved. So the property would have been cheaper. What happens then? Presumably, it's just the way it is.
Yeah, absolutely. The same applies. So if you agree a rate on a forward contract, irrespective of whether the rate goes up or down, you've agreed that price on day one. So that is the price that you'll get on completion. It's completely down to the customer as to whether you want to gamble or not. It's as simple as that. I typically look at forward contracts as a risk removal tool. I personally, if I'm negotiating on a property price, I'm negotiating based on the exchange rate that I can see at the time and the exchange rate that's available. So in my head, if I'm looking at a euro price, I've got a sterling price. I've negotiated it based on that and that which I can afford. If I then let it ride, then there's potential that's going to cost me a lot more in the future. So that's how I would look at it in terms of a property purchase. But absolutely, it could feasibly go up, but it is a gamble. It is literally like walking into a casino and saying on black or red. For me, I would much rather have the certainty on day one that I know that I'm going to be able to afford it on the final day, and I'm not going to have to be scrapping around trying to find extra money.
Okay. We've had a question from James who said, I've just sold my Australian property and he wants to buy in France and London later in the year. Should he transfer Australian dollars to both euros and sterling, or is it best to just put it all in one currency?
Good question. Well, I would suspect that it depends what the current situation is. So if he needs to get the money out of the country, so perhaps he's closed down or closing down his Australian bank account, then yeah, it depends what you've got on the other side. So if you're closing down your Australian bank account and you do have the ability to put money in euros, money in sterling in bank accounts here, then absolutely exchange it and have some in euros, some in sterling. If you're maintaining your Australian bank account until the point that you purchase those two properties in the UK and in France, then do exactly that. Leave the Australian dollars where they are until you're securing those properties, and we'll help you flip them across. But ultimately, if you're buying a property in the UK, you're going to need sterling. If you're buying a property in France, you're going to need euros. So you will need both of those currencies.
Okay, right. Teresa has asked, if I send the total amount, is there a better rate for a large amount of pounds to euros?
Yeah, absolutely. Typically speaking, you will be able to negotiate a slightly better price for a larger value. So absolutely. Again, when a customer is asking for a price from us, we'll always give them a fair exchange rate based on what they're looking to do. A customer that needs to exchange 500,000 versus a customer that perhaps only has a couple of thousand to do, then yeah, basic economies of scale apply. So a larger transaction will command a slightly better price.
Okay, we've had a question from David, who's asked about when the European Central Bank and the Bank of England announced their interest rates at the beginning of February, do you think it will have a positive effect on the sterling to euro rate?
Yeah, it's a good question. I mean, if you'd have asked me this 5 years ago, the market was not so good at feeding information into the media effectively. So interest rate announcements often created pretty significant shocks. These days, politicians are very good at feeding this information in advance to try and keep markets as smooth as possible. So typically, most media outlets, most financiers know what's going to happen on interest rate decision day. It's normally the voting which will create any volatility. But in a typical period, if sterling interest rates are to increase, one would expect sterling to strengthen, and therefore one would expect sterling euro to increase. However, of course, if the Bank of England increase their interest rate by 0.25% and the European Central Bank increase their interest rate by 0.25%, and in theory they're offset, and therefore one would expect very little movement. So yeah, it's what one would expect that the feed-in of information into the media and into the financial system is pretty good, and therefore I wouldn't necessarily expect the huge spikes that perhaps we've seen in the past. Certainly, Rishi Sunak and co are going to be very, very conscious of what happened in September, and they are going to be looking for as much economic stability as possible. And therefore, I'd expect the media outlets and financial institutions to be very, very well briefed on what is expected to come out of the BOE.
Excellent. Okay, well, we've got one more question from Paul. Typically, on a £500,000 property, what do you need to budget for your services, and when does sterling cash need to be released to lock in the rate that you have selected?
So that's a good question. So in terms of budgeting, the best thing to do is to talk to us. We will give you prices at that point, including everything from us. You've got to bear in mind that we're buying currency from a suite of banking providers. So the exchange rate that we're giving you is live and at that moment. And banks obviously are pricing however banks are pricing. So there is no we talk about, or people will talk about interbank rates, etc. But banks are pricing in different areas all the time. So best thing to do is to ask us for a price when you want a price. We will give you a live exchange rate at that time, and that will include our fees in there, so you can see exactly what that is. In terms of when you need to release sterling, so if you're booking a forward contract, we will require a 10% deposit on day one, assuming that your forward contract is going out somewhere in the region of 6 months. So we'll require a 10% deposit on day one. the balance of the sterling we won't need until you're ready to transfer the balance of the euros. So if you're looking to book a 6-month forward contract, we'll ask for 10% on day one. The balance of the £450,000 in that instance, we won't need until your completion day or a couple of days before your completion day. You send us the sterling, we'll send out the euros at your instruction.
Okay, I'm just going to ask one last question. I don't entirely understand it, but just in case anybody else has the same thought. Graham has asked and said, I thought on a forward contract, the original exchange rate booked was chipped away at each day, so the benefits decline over time.
No, what you're talking about there is the interest rate differential. I won't go into too much detail, but it can be a positive and it can be a negative. So what that means is that if you were to ask me for an exchange rate today on sterling euro, I will give you an exchange rate for today for spot. If you ask me for an exchange rate on a forward contract for 6 months' time, that exchange rate will be slightly different. Now, that's nothing to do with us. That's to do with how the difference in interest rates impact the spot price and the future price, if that makes sense. So the same is applicable in terms of in terms of margins and pricing, that kind of thing. So if you ask me for a price today for a spot contract or a forward contract, the exchange rates will be slightly different, but that is based on the banking market. So nothing gets chipped away at. The price that you achieve on a spot contract or a forward contract is exactly what we'll tell you on day one. Nothing changes going forward, but the prices will be different on day one with a spot and a forward contract.
Okay,
I'm not sure.
Brilliant.
I'm not sure if I made that clear.
Great. Okay. Well, thanks very much, Trevor. We've overrun. The sun is going down behind me in over West London. But if you have any other questions, do get in touch with Trevor, or even better, sign up with Smart Currency Exchange, and then you will get your own personal trader who you can discuss these matters at length and get all the questions to all your answers. All the answers to all your questions, perhaps I should say. So thank you, Trevor, for all your insightful tips and advice. We do recommend you get in touch with Smart Currency Exchange directly to discuss your requirements. Thank you for watching this session, and we wish you the best in your move overseas. For those people who are asking about interest rate decisions and that kind of stuff, do have a look on the Smart Currency Exchange website, because you'll find there are they've just published a new quarterly forecast where the major banks explain exactly where they think exchange rates are going to go. So there's tons of resources there. So thanks again, Trevor, and thanks to you for joining us, and happy property hunting.
Thank you very much.